What up, Hyperchange? Welcome to another episode. Today we're talking about Apple. The company's stock has been soaring, almost doubling in the past year. The firm is now worth $1.3 trillion, making it the most valuable technology company on the planet. I bet a ton of you watching have iPhones, AirPods, love Apple products. So I want to make a video about, all my thoughts on the company. How are the financials doing? We're going to go under the hood, see the financial performance, whether the company is fairly valued, and then where do they go from here? What happens post iPhone? Are they going to sell enough AirPods to make up for slowing iPhone sales? Or where does the growth come from when you were a $200 billion plus revenue company? Warren Buffett is now a huge shareholder of Apple. Is that a sign that the growth days are over and this is really just a boring, mature company? I don't know. We will see. But first, let's get under the hood and look at the financials. Welcome to the world of hypercharts. You can go to hypercharts.co/Apple if you want to follow along with me here. As you can see, this is the stock chart. Just want to show this real quick. In the past year, up 86%, going from 150 to almost 300 now at about 289.80 as I'm recording this episode, almost $1.3 trillion of market cap. Pretty unbelievable. So now let's go to the financials. Apple reports their quarters by fiscal year. We'll go to annual here. You can see, so fiscal 19 actually ended in Q3 of this year. So this is up to date, the last quarter they reported in an annual view. As you can see, the biggest trend with Apple's financials, this revenue segments line breaks it down by product, is that iPhones are were way more than 50% of the revenue. That's slowly changing, but this has been the biggest business for Apple by far, has been this iPhone business and kind of been stagnating in the past few years. It hit, 155 billion in fiscal 15, now 142 billion, but still over the long run, I would say this is a pretty good trajectory. But the iPhone has really been the company's cash cow and more than 50% of their revenue. If we start adding this back in, let's look at iPad and Mac together. You can see this has been sort of flat and immature side of Apple's business, but still, doing about almost 50 billion in revenue just between Mac and iPad. Thought it was interesting that iPad, which had been shrinking for like 5 years in a row, finally bounced back in fiscal 19. Mac, interestingly enough, desktop computers, a strong trend, very consistent business, around 25 billion a year, and actually kind of growing slightly, it looks like. But the real exciting part of Apple's business over the past few years has been services. A lot of this is App Store revenue. So when you're doing anything on your iPhone, you're paying for anything, a subscription service or buying something, Apple gets a cut of that. They are the hardware platform, and that high margin software revenue is service revenue, and a lot of it's recurring. And so that has been a huge sort of focus for the company as their hardware sales mature to sell more and more software. And that's the services side of the business here, which has seen explosive and consistent growth, going from 38 billion in fiscal 18 to 46 billion in fiscal 19. And I guess the chart kind of speaks for itself. Here we'll add in other revenue, which, as you can see, other revenue had services in it here until fiscal 12 when they broke out services as its own segment because it got too big. But anyway, so that's why it had that huge drop there. But since then, with the help of the Apple Watch, which sort of started to grow this other revenue, and now the AirPods, we've seen explosive growth in Apple's other revenue segment to doing about 24.4 billion this year, up from just 17.3 billion. I think most of that is actually literally just because of the AirPods, which I think is a very exciting piece of Apple's business. We're going to talk about in a sec, but I think these little products, which a lot of people make fun of, they say Apple's not innovative, actually have huge potential financially and from a technology sort of beyond the iPhone standpoint. But anyway, that is the breakdown of Apple's business here. As you can see, other and services combining to really be a huge growth engine for the company. But overall, revenue is actually kind of, still growing long term here, but actually down a little bit in fiscal 19, mostly because the iPhone sales were down. In terms of profitability, Apple's revenue there, as you can see, pretty strong. They didn't do quite a record this year, but almost a record. It was their second highest year ever. Gross profit, also same kind of trend, almost 100 billion, down a little bit. Operating income, profitability for the company, still kind of with that same growth trajectory, but once again, down. They did about $64 billion in earnings in the last year alone, which is extremely impressive. Apple's one of the most profitable companies on the planet, averaging a profit of about $15 billion per quarter or $5 billion per month. I mean, Apple is like just a money printing machine. And if you do some back of the napkin math, I think this 65 billion number is really interesting because 1.3 trillion divided by 65 or 64 billion, we're looking at about a 20 times price EBIT ratio. So I think for a long time, Apple has traded at a price earnings ratio of around 10 or 15, looking extremely cheap for a company that is, an amazing product that was growing. But now they've really grown into that valuation. The multiple has expanded significantly. That's what's been driving the stock price. price. Like I said, the stock price has doubled in the past year, but the earnings are actually down a little bit. And so this is, they're also buying back stock. We're gonna get to that in a sec, but the real trend here going on with Apple that has been driving the share price is multiple expansion. People think their earnings are worth more and more. So if we go to margins here, you can see, I just think won't spend too much time on this, but I think it's interesting. The gross margins of the company have not expanded despite them growing to more of this service model. Actually kind of a low point here, 37% down from 38%. Down from 38.5%, and they were 40 in the mid 40% range before that. Operating margins with a similar trend, the profitability per dollar of revenue for Apple going down, hitting sort of a record low in fiscal 19 of about 24.5%. So it'll be interesting to see if that turns around. The reason why Apple has been not able to really grow their profitability or margins is because their expenses here have been booming. SG&A growing, but not as fast as R&D, which has been an explosive growth region for the company. So I'm very curious to see, Apple's been experimenting with all these crazy technologies and they're putting up billions of dollars for it. 16.2 billion in fiscal 19, up from 14.2 billion in fiscal 18. Moving down a little bit here, we can see growth for the company has been a little bit lumpy. Revenue was down 2% last year, but I think it's going to bounce back to growth next year. This is their cash flow. As you can see, the company pumping out 60 billion of free cash flow from their operating business, almost the same as earnings there. Cash, this is a really interesting chart. So I decided to do with debt as well because Apple started, they have about 100 something billion in cash, but it was all overseas in these different accounts for, I guess, tax reasons. And so then they started taking out debt locally to access all of this cash. And so I thought it was important to net out the debt here on their balance sheet so you can see the net cash position, which is their true sort of, balance after taking out the debt. And as you can see, the net cash position has actually been going down because Apple's been buying back so much stock. So the business is pumping out $60 billion of cash flow per year, but their cash is going down because they're spending even more than that on dividends and stock buybacks. And as you can see, their outstanding share count as a result of that has decreased dramatically. It was going up, and then they launched this incredible buyback, have been buying back billions and billions of dollars worth of stock, have decreased their share count from 6.5 billion to under 4.5 billion in just 5 or 6 years. So this has been a key driver of value for Apple, and it's an amazing business case study, frankly, of returning capital to shareholders. To get a little bit deeper on this, let's dive into the 10K here. So here's Apple's 10K. As you can see, repurchases of common stock that I've highlighted. This is in the consolidated statement of cash flows on their annual SEC filings. I'll put a link in the description. You can see repurchases of common stock 33 billion in fiscal 17, 73 billion in fiscal 18, 67 billion in fiscal 19. So they are spending in a year about $60 billion to buy back stock, and that stock buyback is decreasing the outstanding share count. So the reason why Apple's value and share price is going up much more than the value of the company is because market cap is share price times amount of shares. If the amount of shares keeps going down while your share price is flat, your value is going down. But because Apple, so we've had this dual effect now, which is why the share price is rocketing, which is Apple's buying back stocks, their share count's decreasing, and the value of the company is going up as people give their earnings multiple a premium, going from like that 10 or 15 PE business to now a 20 PE business. The last thing I want to note really quickly I thought was interesting was sales by reportable segment. They break it down by geography. As you can see, America, always the biggest region for Apple, strong 4% growth last year. Europe was down 3%. China was down 16%. And Apple's actually so big, this could actually be more of a sign of a weakness in China's economy, not necessarily Apple's business. But it's still a $43 or $44 billion business for the company, but that was the weak point this year. Japan down 1% and rest of Asia up 2%. Apple here has, stopped or kind of they've entered a new very slow growth phase. Their earnings are not really growing quickly. They're doing about 64 billion. The company's worth 1.3 trillion, a 20 times market cap. If we look at their guidance, you can see that for the quarter going forward, they project 85.5 billion in revenue, 89 to 89.5, about 38% gross margins, 9.7 billion in OpEx. What you need to know is that results in like a 2 to 3% year-over-year revenue growth and like a 0 to 5% year-over-year earnings growth. So now I want to take a step back and think about Apple as a company. Would I buy at 1.3 trillion? Do I think this is an exciting company? Well, step number one, the growth is slower. I'm personally a risky investor. I like rapidly growing kind of, companies that could fail but have a lot more upside potential, like Tesla, that are earlier in their business model. And Apple has sort of reached this new inflection point where they're returning, almost $100 billion a year to shareholders between dividends, which they've been growing every year, and their share buyback. This has been tremendously accretive. They're basically saying our business is pumping out so much money, we don't know what to spend it on. We're going to buy back stock, pay dividends, and give it back to our shareholders. And so the real question is, what happens beyond the smartphone? Because Apple's, almost 50% of their business is the iPhone. Their services business, yes, that's growing, and their AirPods business, watch business, yes, that's growing, but it's all connected to the iPhone and Apple's ecosystem and their leadership as being the de facto personal computer of so many consumers. And so, I've been doing a lot of thinking about what comes next after the smartphone. I think smart glasses are potentially a hugely disruptive product that basically bring our computer even closer to our face, allow us to have, a much more high speed of data bandwidth or interaction with the internet. I'm talking about Google Glass, what Snapchat's doing with spectacles, what Magic Leap is working on. Facebook wants to come out with their own smart glasses as well. And I also recently had Alex Heath on from The Information, who is a reporter that broke news that Apple is working on its own AR and VR sort of headset device as well that is potentially launching in 2022. And so I think we're at this very interesting inflection point of Apple's business where the iPhone is clearly mature and there's this kind of unknown shift about when and what's going to happen as the next computing platform. But Apple needs to be there if they want to be getting so much value. Right now, Apple is the middleman between so many massive companies. You think about YouTube, you think about Facebook, you think about Instagram, you think about Snapchat, Twitter. These are all amazing apps and software, but what do they have in common? They all rely on Apple's hardware. Apple is the computing device and often the camera that we use for all of these services. And that's why all of these companies, Snap and Facebook and, Instagram along with that are trying to come out with their own hardware devices because they hate relying on Apple. So that's kind of this battle I see going on. And longer term, I think where this is all headed is Neuralink. It's kind of a funny crash course, but when you think about the future of personal computing, brain-machine interfaces are sort of this like end game that everyone is projecting. And so I have to believe Apple is spending a bunch of R&D dollars there as well. But anyway, more near term, let's talk about what could be on the table for Apple. How do they grow their business from here? Let's talk about services. This has been that, extremely exciting, rapidly growing piece of the business. I think a huge thing they're doing here is health. They recently launched the ECG test for the watch. I think that was a huge clue about where Apple's headed in terms of health data and being able to help you and them monetize that. Would Apple launch its own health insurance? I don't know. But I think there's so much for them to do in terms of health and the services side. And Tim Cook said he wants Apple to be known as a health company. Or when we think about, think back on what Apple did over this next decade, it will be, all the things they did in medicine. So that's going to be an interesting area of innovation. I think not a lot of people are thinking about gaming and TV streaming. I mean, these are media services that now that they have hundreds of millions, maybe even a billion installed devices, Apple actually has the opportunity to upsell all of this digital content, and that's going in their service revenue as well. I'm a little bit less bullish on that. I just think Apple streaming service is way worse than Netflix or Disney, but they're trying that, and that has an avenue for growth for streaming as well. But what really gets me excited about Apple's growth potential is that other category where I think the watch is slowly growing. That's a nice little product, but what they're doing with AirPods cannot be overlooked. According to the CNBC report, AirPods were a $6 billion business this year in 2019, and in 2020 they could be a $15 billion business in revenue. I mean, Apple, yeah, they're like barely growing revenue at all. So if we talk about $9 billion incremental AirPods revenue, that would drive 3% revenue growth for Apple overall as a company. So as the main business of Apple is flat, these little growth levers were, I guess, not that little. We're talking about 10 billion revenue, but AirPods could actually meaningfully contribute to the top line of the company. I think is an interesting sneak peek of Apple's products getting more intimate with consumers. Wearable technology, I mean, the way you tap on your AirPods, their functionality is improving, the way it interacts with voice. I think this is an interesting sort of stepping stone to Apple's glasses product, which will probably interact with the AirPods. I think there's a lot that Apple can do here. And as much as people think they're sort of a one-off, Apple gets made fun of the AirPods, I love my AirPods. I don't go anywhere without them. They've changed the way I listen to music. I feel like corded headphones are just such a thing of the past. And just the functionality, the way they work, the way they charge in the case. Apple's really onto something there, and it's driving meaningful growth of the company. And I think it's going to expand greatly into this wearable computing platform. And people aren't thinking of it like that, but I think that's an interesting and very exciting piece of Apple's business. The smart glasses as well. I mean, I'm not putting any value on that because I think there's been rumors of Apple glasses for years. Clearly the technology is not ready yet, so I'm not really pricing that into my model, but that is something that would accelerate other revenue or a new, type of hardware product for them. in the future. Additionally, we have Project Titan, which is Apple's rumors to launch an electric car, which they seem to be of scaling back those efforts. They do have autonomous vans shuttling passengers or employees around Cupertino at their new headquarters. But I think Apple's been experimenting a lot with this car project, but will that be a product? Will they actually launch something there? I don't know. But I do know that I think vehicles are the next computing platform. I've said Teslas are computers on wheels. I think Apple to buy Tesla is kind of a no-brainer from Apple's standpoint. Of course, that's been a rumor in the tech world for a long time. I think it makes a ton of sense for Apple, who has $100 billion in cash, to get exposure to this amazing growth asset. I think the car is the next computing platform to get revolutionized. Every car on the road is basically a dumb car except for a Tesla, which all runs on this touchscreen, which as cars get autonomous is going to have more and more of users' attention. It's going to be a more and more important hardware portal between humans and the internet. And when we talk about why Apple has so much value, it's because it is that portal. And so I think the car is clearly an area where Apple would love to compete and be, but can they pull it off? Can they do what Tesla's done? I think the chances are slim, but they're still working on it. The last thing is, I thought this was fascinating. They recently come out this rumor, Bloomberg reported that Apple has a secret team working on satellite technology that the iPhone maker could use to beam internet services directly to devices, bypassing wireless networks. So this is something that Apple, or that's kind of been a rumor for a long time. I mean, Apple has turned AT&T, Verizon, Sprint, T-Mobile, all these carriers that were brands into sort of commoditized utilities, basically dumb pipes, just, getting you the data to your iPhone. And they've gone more and more direct to consumers, just letting you do everything with the subscription service to the iPhone. And so I think this kind of makes sense long-term for Apple to vertically integrate and not rely on these wireless carriers, launch their own internet service. I mean, this is a pretty crazy out there idea. Shows another reason why Elon Musk's Starlink is so forward thinking. But I don't know. I thought this was an out of left field growth avenue that I hadn't heard of, but apparently Bloomberg is reporting that Apple is working on this project with the goal of deploying their results within 5 years. So we will see. That wraps up this episode. I just wanted to give you an overview with the status quo of Apple. I think this is an amazingly run company. I mean, they have no debt, $100 billion in cash, rock solid, squeaky clean balance sheet. They're pumping out tens of billions of cash flow per year, returning it to shareholders. They're going to keep buying back stock. They're going to keep raising their dividend. I think this is an amazing sort of value blue chip tech company on some levels, but on the other levels now, the growth is minimal. The PE is expanded to 20, and the question of what happens after the smartphone, how long is this moat going to last for Apple, is more pressing than ever. And that would be one risk that I have on the horizon. If I'm going to ask Warren Buffett or Tim Cook, it's, are you ready for what happens after the iPhone? Is that going to be something you're going to lead? Because if it's not, then I think the valuation doesn't make sense. But if Apple, if the iPhone stays around for another decade and even stays flat and Apple can just grow services, then I think this could be even a good buy. But I just think there's some question on my mind of how fast does that next computing platform happen and who is it? And that is the biggest question. I would love to know what you think in the comments below. Any ideas on Apple stock? Are you long the company or not? I, of course, own all Apple products. I love them myself, but I wouldn't buy stock in the company because I think it's a little too boring for now. Anyway, this is Hyperchange. Huge shout out to our Patreon supporters, producers, fun in the channel. I'll see you guys next time. Peace.